Welcome to the B.F. Anderson Technical Report for March the 17th. I wanted to step back a minute here and just kind of look at the overall macro picture. The economy is really in pretty good shape. You know, the unemployment rate is down under 4%. But I think what's interesting about this graph, now this comes out of the Chicago Federal Reserve of Chicago, basically showing that delinquency rates on credit cards are really at incredibly good levels. Then if you take another shot at the another indicator would be the Chicago Fed National Financial Conditions Index. You can see here back during the pandemic, got very in bad shape. Back here in the 80s, it was in bad shape. But right now, financial conditions are quite solid. You look at the unemployment rate, you can see, we're down to 3.8%. Jobs report this morning was very favorable. Now, I wanted to go back real quick and just take a snapshot of past situations. Now, what I have here is the aggression index, which is the Nasdaq divided by consumer staples. I went back to the .com bear market, and I'm showing here, here's the Nasdaq, here's the S&P, but also I have down here Apple Computer. The thing that we have to realize is that once we get through the process and we start to see a stable pattern, you're going to start to look. You need to have a watch list where you're looking for things. Well, Apple was on our list. We were watching it. So you have a watch list. Then all of a sudden we broke out here in 05. So if you look at where we were, now we didn't pay $1 a share for Apple because it split several times, many times in fact. So the price we're looking at here is split adjusted. So we bought right in here on this gap up. You can see the volume came in a big way, and we were involved in Apple around $1 a share. So this is what happens. You get into a bear market, but the really good stuff starts to pop up, and that's when you get to see it. Now, here we are. We got a little bit of a rally yesterday, bounced us back above the 10-day moving average. Hopefully, we're putting in a bottom. You can see here kind of a base pattern. Now, this is the Nasdaq. Now, if we look at the long-term 35-week, we're still below the 35-week. So we're not completely out of the woods, but things did look a little better this week. You can see here the mid-cap stocks, again, looks like they're trying to form a base here, somewhat of a W formation, head and shoulders actually, where you're breaking out on the right shoulder. Kind of positive. That's on the mid-caps. Now, on the New York Stock Exchange, you can see, we have the downtrend. However, yesterday we broke out above that 10-day moving average. This is a positive development. Small caps look like the same thing as the mid-caps. We got somewhat of a bounce here, somewhat of a head and shoulder where we're breaking out to the right shoulder. Now, on the S&P 500, downtrend, however, we did bounce up above the 10-day moving average, looking more positive. 35-week. We're continuing again, just like the Nasdaq. We're still below that 35-week moving average. Would be nice to get back above that area. Now we have the aggression index. You can see where we finally have gotten somewhat of a definite upturn where we're starting to challenge that 10-week moving average. In fact, we just barely kissed it yesterday. Hopefully that's going to stabilize and get into an uptrend. The three economic indicators, you see that interest rates are really working their way higher here. We're at roughly a 2.2 10-year Treasury note. Oil prices coming down fairly dramatically, been quite a turnaround. And as a result of higher interest rates, we're starting to see the financial stocks improving. New lows continue to be high, higher than I would like. So, this says basically that we're just not out of the woods yet. On the trend strength, we're still at a trend strength of 0. Would like to see us get back up into this area here, but over time we'll just have to watch this. Here's the S&P trend strength, again, continues to be 0. However, in a little bit better shape than the Nasdaq. Now, on sentiment, the exposure index continues to stay in a very opportunistic pattern. This is basically the exposure that active managers have to the U.S. equity markets. We're now up to where the exposure is up to about 43%. We did get down to 30%. However, on the put-call ratio, again, kind of a pullback and moving more into greed a little bit, but we're still above that middle point. On the ratio, which, by the way, will be updated today, we continue to be in fear. which is usually where market bottoms are made. So it's somewhat of a positive. Volatility index has been in a very strong uptrend, however, is rolling over. Volatility hopefully is going to settle down. You can see here rate of change is showing that we've had about a 13% drop in the last 10 days of the VIX. So it does appear that the volatility is getting better. Now on the top 5, you can see here's a company called Zim Integrated Shipping. We have owned this stock in the past. Continues to be in a very strong uptrend above that 10-day moving average. The shipping stocks are looking strong. Here's Titan International, which is automobile tires and tires. Again, very strong uptrend, has a positive pattern. This is Occidental Petroleum. We know that the oil stocks have been red hot. Warren Buffett actually took a position in Occidental. Continues to look okay. I would continue to monitor though. CF Industries fertilizers took a big hit yesterday. We're starting to see some of these commodity stocks starting to come off a little bit. Last but not least, we have a company called Fluor, which is basically in the construction business. You got a nice gap up here, forming somewhat of a flag formation. We'll have to keep an eye on it. So all in all, things are looking a little better, but I cannot emphasize enough that once we start to get back into an uptrend, the indicators are going to be less important, but your stock selection will become the most important part of the process. So you really need to be on top of this, have a good solid watch list. Don't get too aggressive here, but I would be watching. Thank you very much.